I'm Pat Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about the fund flows activity for the week ended Wednesday, August 23rd. Let's start today's report by taking a quick look at the week's market activity. Both the Dow Jones Industrial Average and the S&P 500 Index were off approximately 1% for the week. The equity markets were hurt by the terrorist attack in Barcelona, as well as continued turmoil out of the White House. Negative news coming out of the White House during the fund flows trading week included another high-profile member of the administration leaving, Steve Bannon, the chief advisor to Trump, as well as rumors that another high-level ranking member was on his way out as well, Gary Cohn, the chief economic advisor. Turning to their agenda, once again, the markets were hurt by President Trump's inability to launch his economic agenda, specifically the tax reform and the infrastructure spending, although the markets did gain some traction late in the week based on the news that the administration was getting close to unveiling its tax reform plan. Let's turn our attention back now to the fund flows activity. We'll start by taking a look at our fund macro groups. For the week, equity mutual funds saw about $2 billion in outflows. Taxable bond funds saw roughly $881 million leave their coffers. Muni bond funds took in $624 million in net new money, and money market funds once again were the driver of the net inflows, as they took in approximately $24.6 billion for the week. Let's take a closer look at each fund macro group now. We'll start by looking at the equity group. As mentioned previously, equity mutual funds with their net outflows of $2 billion for the week. It was a 9th straight weekly outflow. As usual, as a trend we've seen for most of the year and last year as well, domestic equity funds are responsible for most of, if not all, of the net outflows. They saw about $2.9 billion leave this week, while non-domestic equity funds took in $940 million in net new money. For the year to date, it's more of the same. The group as a whole, equity mutual funds have had net outflows of just over $51 billion, all attributable to domestic equity funds, which have had net outflows of over $80 billion, while non-domestic equity funds have taken in roughly $29.4 billion in positive flows. We'll move on to the equity ETF group now. This group saw net outflows last week as well, saw about $1.4 billion leave. It was their 2nd straight weekly outflow. The largest outflows by individual ETF included PowerShares QQQ, which saw $927 million leave, as well as a consumer discretionary select sector SPDR product had about $860 million in net outflows. On the other side of the ledger, SPDR S&P 500 product took in about $2 billion in net new money. Let's move on to our taxable bond fund groups now. We'll start with the mutual fund group. Net outflows here as well last week, about $881 million. The major players, the major contributors to those net outflows were the Global Income Funds Group and the High Yield Funds Group, which had net outflows of roughly $1 billion and $925 million respectively. Let's move over now to our taxable bond ETF group. Bucking the trend here, we saw some net inflows for the week. The taxable bond ETF group took in about $1.5 billion in net new money. It was their 7th straight week of net inflows. The major contributors to the net inflows was the iShares Core U.S. Ag product, took in $473 million in net new money, and the SPDR Bloomberg Barclays High Yield product had net inflows of roughly $258 million. Conversely, the iShares iBox High Yield Corporate product had the largest net outflow for the week at $341 million. Let's move on to our Muni Bond Fund group now. This group had net inflows again last week. It was their 6th straight week of inflows as they took in $624 million in net new money. Major contributors, we see these names over and over again, was the High Yield Muni Debt Fund Group, net inflows of $249 million, and the General Muni Debt Fund Group had about net inflows of $119 million. Last group to take a look at this week is money market funds. Once again, the major driver of the net inflows this week, they took in $24.6 billion in net new money. fifth straight week of inflows for the group, during which time they've taken in roughly $97.2 billion. Major players this week were the institutional U.S. government money market peer group and the institutional money market peer group, which took in net new money of roughly $20.3 billion and $4.9 billion respectively. That wraps up this week's report. If you'd like to take a closer look at the data yourself, please join us at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about that week's fund flows activity.